Today, we will focus on the fundamental secular drivers of AvePoint's business and gain some real insights as to how enterprises think about their data management strategy in today's complex operating environment. We will leave a little bit of time to run through the financials, as well as take questions from the Pigeonhole. So TJ, thank you for today. So let's kick off, right? For those who are not really familiar with AvePoint, do you mind giving us a brief history lesson on how the company started out? And not many billion-dollar tech companies can say that they started out in a public library.
Yeah, good afternoon. Thank you, everyone, for coming to this event. Thank you, Merrill, for teeing up that little brief history down memory links. So the origin of the company was, my first job out of Cornell for undergraduate and master's in electrical computer engineering was Bell Labs, Lucent Bell Labs. At that point, 97, it was the most commonly held stock in America because Bell Labs. That's where I met Kai Gong, the other co-founder. But quickly I left Bell Labs because it's just another telco. So I went to Wall Street, as most people do in New Jersey. You jump to New York City. So Deutsche Bank and the Lehman Brothers writing trading systems. And then when 9/11 happened, my office is 40th floor North Tower, World Trade Center 1. Luckily, everyone on my floor survived the event, but it's, as one imagined, a life-changing event for all of us that witnessed it. So I decided to go back to grad school. First, the Stern MBA program, and then switch over to the doctorate program for machine learning and data mining. Also around the same time, Lucent became Lucent Alcatel. Many of you have long memory of investment. I remember that. And many people were laid off. So Kai is 12 years my senior. We're good friends. He thought that it's a good time. It's a trigger for him also to start this business. So he started coding in Somerset, New Jersey Public Library for 3 years. So the person who knows them the best is the janitor, the custodial staff. And then it's very hard because initially we started, and I was in grad school, so I was helping him part-time. So initially we always focus on B2B, enterprise-grade software, because that's all we knew. We didn't know B2C. Of course, imagine back in this 2001, 2002 days, you were getting CDs, software on CDs. There's no cloud, there's no subscription. So nobody will buy a CD from a guy and a half from New Jersey. So he got kicked out by his wife, living in a friend's basement. These are the 99.9% of the entrepreneur stories that most people don't talk about. But as one, to be successful, you have to work hard, which we did, and you have to also be lucky. And we got lucky because we picked this area that not many people pay attention to. It was called Lake Tahoe Project, and then later became Microsoft SharePoint. And of course, today, SharePoint is the underpinning of all Microsoft collaboration fabric. So in Teams, in OneDrive, and in any Office product, if you want to do multi-editing, sharing, et cetera, co-authoring, it actually goes through SharePoint. Whereas Google Workplace, is native co-authoring out of their cloud infrastructure. So that's the fundamental difference. So we became the predominant player on-prem world to do the whole data management, data security, data governance play for this enterprise content management platform. That was replacing Lotus Notes, that was replacing Documentum, OpenText across enterprises. And it was heavy, it was used by regulated industry, governments, banks. So for us to continue to support and grow, we went global. So we were in 18 countries. We were always very focused on cash flow, so we never borrow money. So we're very prudent and established the global footprint. And we were also the first to invest into cloud. So in early 2010, Steve Ballmer was still the CEO, if you remember. Microsoft stock did not move for 10 years. So everyone was saying that Microsoft's dead, it's not interesting, Google is the future. But we stay close to the customers we know. Obviously, people are still using Microsoft, and not only that, their cloud investment is going to be something that's transformational. So we were the first to go into cloud. I remember in 2011, they had this worldwide partner conference. I was on stage, say, hey, everyone has to get ready for this $1 a user a month subscription model. And people thought I was crazy because at that time, everything was perpetual software and maintenance. So we were the first to invest into cloud. We converted subscription conversion, which is a very tough process because you have a cash crunch. And we did that without borrowing money. So in hindsight, we should have done that, borrow some capital, and then grow faster. So that's the story. So we became first on-prem and then cloud, expand our TAM from not just enterprise content management, but the entirety of Microsoft Office. And today, of course, we also cover Google, cover AWS, cover Salesforce. And our focus is unstructured data management, governance, and security. And unstructured data are emails, files, chats. That's 80% of all data, by the way, and it's growing at a very, very fast clip, thanks to AI as well. So give you just some indication, in Microsoft Cloud alone, every month, they're adding 600 petabyte of net new unstructured data. And by the way, unstructured data is the #1 target for cyber security criminals. It's your emails, it's your contracts, because that's where they get your financial information, that's where they get the business flow, and that's where they go after a potential financial crime. So this is a massive area that we find ourselves in. And now with AI, it just exacerbates everything. Before, you can have your data kind of safety by obscurity. You can't find it anyway because the enterprise search is awful. So now everyone's using Gen AI as a powerful search. If you don't do it properly and have the proper permission control and data curation, you will have actually massive data exposure problems, both internally and externally. So these are the problems we actively help enterprises address.
That's a great introduction. Thank you for sharing that amazing journey that you've had with AvePoint. So the library project essentially turned into Microsoft Cloud Services' largest data management provider, right? So that's really quite fantastic. So if you talked a lot about the journey and obviously some of the pain points. I just wanted to focus a little bit on Microsoft first. If I go to your webpage, you have a webpage listing all the awards that you've won with Microsoft. There are country awards, regional awards, and even global awards, and they span, all these different verticals. Could you kind of talk through, which awards mean the most, which were really the most difficult to attain, and what that really means for AvePoint within the Microsoft ecosystem?
Well, first, thank you, Merrill and Jin, for doing deep research. I didn't know people go back to those web pages and look all the way back to 2014, 2012 days. But yeah, there's 100,000 Microsoft partners, by the way, and it's very difficult to get these global awards. So our first awards is actually in public security and safety. And that's the great work that we have done with the US DoD and State Department. So that's in 2014, around that time. And that's a global award because, again, public sector, not just America, but Singapore, Japan, Australia, New Zealand, Europe, is our biggest vertical because they are the one who really cared about data security, governance, and management, just from a compliance and regulation perspective. Of course, then FSI, financial services. So we start there. So we're very proud of that. And second award I was very proud of is our country award for Japan. That was, I think, about 3 years ago. The reason I'm proud of that is they never give any foreign company that award. It's always a local Japanese company. So to get that award means that finally we're recognized as a local player. We've been in Japan since 2008. And most of you that's done business in Japan, it's a very special market. It takes literally 10 years to establish credibility. And once you have credibility, it's amazing. It's our fastest growing market. We're doing super well there. And the last one is the EdTech Award, which is another global award. And that derives from the fantastic work we have done here in Singapore. So Singapore, also many of you know, is the lighthouse account for education. So Singapore really lead the world in terms of thoughtfulness and planning and even technology investment in not only K through 12, but also higher institute of higher learning. So we start working on the polys in 2016, and then in 2020, we actually started this AvePoint education-focused company, specifically launched in Singapore. Since then, we have completely dominated the IHL space. So all the training management, learning management, digital assessment of all the university, all the polys, and all the government academies, including NTUC Learning Hub, their next generation learning experience platform used by all union members. That NTUC services are now on our platform. So in the days of continuing education, lifelong learning against AI disruption, these training platforms, stackable courses, recommended career path, tailored learning path capabilities, it's more important than ever. And of course, it's close collaboration with Skills Future, all the institutions and top schools. So these awards are the ones I'm most proud of because they actually highlight different aspects of our business and the global nature of our business and the overall resiliency and comprehensiveness of the business.
Thanks, TJ. So it's very clear that you're a valuable partner to Microsoft. Can you kind of talk about how your partnership with Microsoft has evolved? You know, because Jeff Teper also sits on your board, and you know he's a very senior executive at Microsoft. Could you talk about how that, you know, is strategic to your growth?
Yeah, so Jeff Teper is godfather of SharePoint. I first met him in 2003. That's our first big break. So we were at a trade show, just a table and tablecloth. We buy these monitors from Stables and then return them afterwards. So we have basically free equipment. In America, return policy is amazing. Not so in UK. And so Microsoft released a second version of SharePoint. And then, of course, they don't have a migration path. And we were the one who did the backup. So we know the data schema, even though the backend database and data structure is completely different. When Microsoft said we don't have a migration path, everyone was very, very angry, including their top partners like Dell and HP. So we knew we could do it. So we plastered flyers all over the conference in Orlando and say, you know, we can do it. So that's when I met Tiber. He came over to our table. He's like, can you do this migration? We said, yeah. So come next week to our Redmond office, show us. So Kai actually got onto the cheapest connecting flight from Newark to Seattle with his tower PC because he's too poor to have a laptop. And then plug into the monitor, show Jeff it worked. So Jeff's like, great, we will start to refer our biggest partners to you. So that's actually how you really get our breaking B2B software. You have to get credibility. And once you have credibility, people trust you, then they give you a lot more business. So it's really reputation-based type of business, and we have known since then to be the company that go after the hardest bone to chew, if you will. And then Jeff's like, hey, how come you didn't bring a laptop? Why you bring me this giant tower? And Kai was too embarrassed to admit that he's so poor. So he said, my laptop broke, so I broke my tower. So that's kind of our little funny run-in with Jeff. So he's been on our board since 2014. And now he's the president of Collab, OneDrive. So basically, he's his dev team, his product team oversees the entirety of Office Cloud. So now, of course, he has his obligation and duties to Microsoft, their segregation, et cetera. But the relationship with Jeff and others, because we have been a Microsoft partner for 20 plus years, we have a fantastic relationship at the product team level, whether it's AI, whether it's Copilot, whether it's Office, whether it's Azure. So we are considered part of their partner advisory council. So we actually get to see the newest bits from Microsoft, minimum 6 months, if not 9 to 12 months ahead. So we know where the roadmap is going and how they're thinking. They're actively canvassing feedback from us because we're actually oftentimes very closer to the customer than their product teams are. It was funny. Recently, I was at Executive Briefing Center in Microsoft. Our guys were talking about how to better serve managed service providers, and we were using all these API calls, so Intune. And then our guys quipped that these APIs, they've been beta for 7 years, and we've been using them. When are you not beta it? And the Microsoft, product managers were even shocked, like, oh, we didn't even know people are using it so actively. So we actually oftentimes known that, we know their stuff better than a lot of their product managers. So that's kind of the true technical partnership that we have, how we can continue to stay ahead of the curve and forecast where the puck is going and forecast where the revenue opportunities are.
Great. In your annual report, you also kind of spell out a collaboration for co-sell and co-market of products. Do you want to just, give us some color what that entails?
Yeah. So co-sell does not mean the name suggests that, but it doesn't mean that Microsoft's helping us sell. Microsoft doesn't help anybody sell anything other than their own product. That's why they have fantastic margins. And we also don't sell anyone else's product. That's why we have fantastic margins as a software company. The co-sell means that because we do everything in Azure, everything that we derive and manage on Microsoft Cloud in Azure, we consume a ton of Microsoft compute. So we have a 9-digit relationship with them, and we're one of the largest. So in the same category as DocuSign and Adobe. So that's asymmetrically how important we are to them. So as Microsoft's way to incentivize their teams to better triangulate market intelligence with their partners, they look at these metrics because we're burning the meter, right? They see it. So then they ask all the partners to register the accounts that they're winning. And then they give the account manager on the Microsoft side the heads up that this is happening. So then we have a conversation. But ultimately, this KPI becomes a very important KPI to track a partner performance. So Microsoft is very good at making partners jump, right? When Microsoft say jump, we say how high. We don't question, right? So, so in that way, they call it co-sell. So we actually burn the most globally. Acquiring logos, and there are different metrics that, of course, going forward is all about AI, right? Everything else doesn't matter. It's how much AI workloads that you burn and introduce and land, et cetera. So, so we are the top 5 globally by that metric, co-sell, again, in the same category as DocuSign and Adobe. So even though we're much, much smaller than those companies.
Great. So maybe just to wrap up on Microsoft. So I guess if we look at the growth rates for Azure, the Azure has been taking share over the last couple of years. So most investors, they see that. And then so how do we match that kind of growth rate when thinking about your growth potential?
Yeah, that's a great question. So today, predominantly, our revenue is made in Office Cloud. Azure is their infra cloud. So the biggest competition to Office Cloud is Google Workspace, right? Google Docs, Gmail, et cetera. Whereas Azure, it's competing against AWS. AWS is number 1, Azure is number 2, closing fast. Their growth rate is higher than AWS. And then GCP, Google Compute Cloud, is a distant third. But they're catching up also very quickly thanks to Gemini and AI capabilities. So we are starting to roll out IaaS and PaaS solutions, so infrastructure as a service, platform as a service solutions. That's where we're going to start really making revenue in those ecosystems. So that's where you will see. So the relative disconnect is that our growth is really focused on Office Cloud today. That majority, 90+% of our growth is there.
Great. So in the introduction earlier, you kind of talked through quite a bit of the pain points that the C-suite is facing today. We have to deal with, data growth, the strategic importance of data, all while managing cybersecurity, as you said, and then also dealing with digital transformation, and then having a cohesive AI strategy. It's just so much to deal with. So in the conversations you've been having more recently, what's top of mind? How do we kind of rank set the priorities? And how does AvePoint come into those discussions with the C-suite?
The biggest priorities across all companies C-suite today is AI and security. These are they don't talk about anything else. And we're perfectly positioned in that because security in terms of data security, right? Obviously, security is a very big word. You have firewall, you have anti-phishing, email, and there are many ways to get into your network security, endpoint security. We're very focused around data, the inner sanctum, if you will, who has access to your critical unstructured data, how long those access are left open, and who are the owners, and if the owners change positions or leave the organization, do we need to shut it down and delegate administration and escalate up? So this kind of delegated governance framework is something we're very well known for, and we're very unique in the industry. We've been doing it the longest. And we did that, actually co-developed it with some of our biggest banking customers. That's a requirement from them. And then, of course, once you have proper data, this lifecycle management, access control, data curation, then that leads to better AI because companies don't just take a commercial available large language model and use as is. Because those would just, scrape the internet. So it would just be as a good summer intern. But to turn that into from a summer intern into a actually knowledgeable person for your business, your industry, you need to do refinement training for your own proprietary data. And we all know companies' data is everywhere. It's messy. There's old files. There's on file shares. There's on Box and Dropbox, and obviously probably AWS storage, and then of course your SharePoint online, et cetera. So be able to consolidate that to remove old, trivial, redundant data, and have more highly available. Because at any one point, we actually have this phrase in our industry is that this concept of dark data. The total amount of data you have, 90% of it is actually not useful to you at this moment. So how do you actually treat that properly? And what part of your data is used to train the AI models to be sophisticated enough to talk about your business? So that's why we say, hey, better data leads to better AI. So AI hallucination will get worse if your data is corrupted or redundant or out of date. And of course, the other side of it is risk and exposure. So for example, many of the biggest banks in US, including the largest 4 auditing firms, they all deploy our governance solution for Teams before they deploy Teams Copilot. Because Microsoft Copilot grounds on the Office Graph security infrastructure. And that just means what is your default permission for all your digital assets that you have access to in a company. And I bet you most of you don't even think about what's your access rights to a certain file, to a certain drive, to a certain folder, and never mind go update it when things change, especially if you work in a regulated industry setting. So we have a full-on automated way to do this with software. So if you don't do this properly, what AI does is it just assumes you have access to all these things because the permission says so. And then it will start recommending things to you based on those information. And that causes massive problems for companies. So think about companies with ethic walls, think about companies that separates research and sales. So we're all regulated industry here, so we understand that very, very innately. So that's the fundamentally what we do. We basically help companies drive a better AI posture and security posture. And of course, this is a continuous thing because now folks are using, hey, this AI model production, whether it's documents or drafts or proposals that's AI generated with human modification, it's a really good document. It will become future training data. So it's that feedback loop, right? So if you don't continuously monitor that feedback loop with human in the middle, the AI can go sideways very, very quickly. No different than the echo chambers of social media.
Great. But I guess when we see in the media, the idea around AI hallucination is such a big thing, right? I think C-suites, if you can't, put their mind at rest around the degree of these AI hallucinations, they're not just going to adopt, right? So you hear pilots that potentially could stall or maybe are delayed a little bit. So is it just as simple as bad data has just led to bad AI? And just to double click on that because it's such a big deal today.
There's definitely bad data leads to bad AI, right? There's also fundamental architecture of Gen AI capabilities today. So I actually studied under Yang LeCun at NYU. I just heard Yang LeCun's leaving Meta, because of the politics over there. But he's a godfather of neural nets. So the fundamental back propagation of neural nets is effectively every word after another word is statistics based. So because of that, it's very, very actually hard to get rid of hallucination or misinformation completely. So of course you have various techniques, RAGs and other techniques to make sure that you limit, and also you have citations and making sure that your citation is real. So have different processes to double check those to ensure that you limit. And of course, the more you scope it, the tighter the scope, the better the response, the more limited the inaccuracies. So that's definitely a very important aspect. I think increasingly enterprises are also getting more sophisticated on what is this general purpose technology good for and what is not good for. So for example, I have a lot of senior contacts within Salesforce. So Salesforce's AI capabilities, because it's dealing with transactional data, is even more critical for them to be accurate. And they're having a lot of trouble finding enterprise-wide deployments beyond POCs because of that numeric accuracy that's required for that type of data set. So I think it really depends on use cases. Is AI valuable? Absolutely, right? It's really great for ideation. It's really good for search. It's really good for consumption of ton of information very, very quickly. So for example, for a big hedge fund in Hong Kong, we designed a digital IC member, AI IC investment committee member, where we mapped their 25 years of decision and profile this AI IC member to their founder and CEO. And then they would do, based on new investment decisions and information available, they will compare the digital IC member versus the real person and rank them like how close they are, right? So far, they're pretty good, but every time and then the AI ones will make certain interesting, recommendations. So these are, they're useful tools, but at the end of the day, they're still tools. They're not completely, AGI or super intelligent things. So we still have to be very careful on how we curate and have guardrails around and how to use it.
And just a last question around adoption. So if, let's say, these frameworks are clearly addressed, then obviously fine-tuning and reinforcement learning continues to advance. I guess in terms of the ROIs that these enterprises and business impact that they will ultimately see, is it to the right, clearly?
That's the hope, isn't it? So I think right now, everyone, if we look at mainstream media, there's a bit of circular economy. There's a lot of bubble talk. That is true. I think we have passed peak AI. Now it's about, it's a little bit of the kind of the, it's not quite valley of despair, but it is realizing and implementing practical use cases. I think the one thing Jensen Huang said, there are many things I actually don't agree with what he said because he's very self-serving to NVIDIA's interest, because the depreciation rates of those chips are very, very fast. So you cannot compare them to investment in a building. A building lasts 100 years. So, but one thing he did say is that compared to the fiber bubble in the early 2000s, most of those fibers are dark. Today, every single GPU deployed there are red hot because they're being used. Now, whether they're being used efficiently or not, the Chinese model is more and more efficiency. So you squeeze more and more compute and results out of the same chips and less power. That's for optimization purposes. But it is true. Right now, the demand is outstripping the supply. So even if we are going to go into a bit of a correction, this general purpose technology, this is now the 6th iteration of AI hype, I would say. It is here to stay. There's real value in this technology. So Gartner actually really advocate this truism framework, right? So every layer of your infrastructure has to be responsible, whether from the infra to the data, to the application, to the AI recommendation, and they all have implications. So it's actually no different than when we were, the whole world is worried about privacy, GDPR in Europe, PDPA in Singapore. There's policies, regulations, mandating vendors at different parts of the supply chain to be accountable and responsible for data privacy. I think AI, that's happening in the AI world as well. We're mandating different vendors at different layer of the hierarchy of the tech stack to be accountable, so that overall net is that you have a positive use case of AI and reduce this misinformation and abuse.
And then just really quickly, when we think about the overall threat environment, because the data is just so important nowadays, what's also happening with the regulatory landscape? Because AI is so fast moving, as you said.
I think the regulation is definitely very behind of the actual technology. I think last week, there was an ICE agent in US that held up a phone and scanned reportedly immigrant, right? Because that person didn't have ID. And all of a sudden people in America woke up to the fact that, oh, government does have a database on everyone, right, for facial recognition. So, and there's no regulation for it today. So regulation is definitely catching up to the capability of technology, but the threat landscape is much, much faster now. So it's no accident, actually, in the span of the last 2.5 weeks, you have major Amazon downtime, as well as Azure downtime, because things are moving much faster, and the volume of incoming the vector of attack is evolving very fast. So AI is definitely being used by bad actors. So now AI has to be also used by the good guys to counteract. So it's things are moving very, very fast.
So it sounds like having a robust data management strategy is very, very critical. So maybe could you just help us understand adopting the company's confidence platform and then buying into your beyond secure strategy? What are some of the customers kind of expecting, and they come out the other side after investing? What are they expected to see and what are the returns?
Yeah, so we have an end-to-end platform that we started by focusing on people's migration path to go to cloud, right? So data analytics, data integration, migration, and then once you're in cloud, data backup, backup as a service, ransomware detection, recovery. And then, of course, from a regulated industry, we start doing classification, labeling, and then governance, lifecycle management, and retirement. So this whole end-to-end lifecycle management of data, it's very traditional enterprise content management play, but nowadays it's basically becoming the base level hygiene one needs for responsible and secure AI deployment. So everyone really need to go through all these steps to have base level trust, right, of your data estate, base level trust of guardrails around AI. So one of the things that we have done is we started by doing the governance of objects, and then we start doing the governance of applications. So low-code, no-code, Power Apps, Power Platforms, and now agents. So the biggest thing is agentic governance. So today, most agents running enterprise are just little programs that you vibe code and then you do some workflows. But what all the hyperscalers envision is full-fledged AI employees, digital employees. For every carbon-based employee, you have multiple AI-based employees that are fully licensed to do a lot more things. And in those regards, it actually can become very, very dangerous. How long what kind of data access and data services these agents have access to, how long they live for, and what kind of groups and permission rights and what kind of grouping for regular employees they have. So working on active guardrails around these agents, it's the hottest topic going forward. So today we help already the folks like PwC and Deloitte managing tens of thousands of agents. These are smaller agents, but when the full-fledged agents come out, that's even another order of magnitude harder and more complex problem. So the seat counts will not reduce, the compute will not reduce, it's only going to increase. Even if we're saying now companies overall are slowing down on hiring. I actually spent the last 2 days, one day with Cornell, one day with NUS, talk about what's the future of university and what's the future of education. Because now computer science students are actually finding it difficult to find jobs. That's a new phenomenon. Today, a Cornell engineering computer science student is finding it very difficult to find a job. The first time in many years. So entry-level jobs are less. And also mid-level jobs, so people with 5-year, 10-year experience, those are also becoming under threat. Because what does AI do? It collapses the management layer. Jensen Huang talked about one person manage 50 people. The Jack Welch model is one manager manage 8 people or maybe 10. That model is now going out of the window, right? So there's actually some really big changes happening, transformative changes happening due to this transformative technology.
So maybe just to help the understanding for people here, can we talk through a typical customer buying journey? In the materials that you provided, you show a Fortune 50 consumer company, having annual recurring revenues of $1 million going to like $4.5 million in like 3 years.
Yeah.
Right? Can you talk through the mindset pain points they're trying to solve and how they've basically bought into the platform?
Yeah. I would say pre-COVID, the typical buying journey is first go to cloud, so migration, data analytics, integration, migration. Folks that do these, the bigger companies like Informatica, right? You think of those guys, or Quest Software, which is a legacy. And once you're in cloud, first thing you worry about, companies worry about is data resiliency and business continuity. So disaster recovery, backup as service, ransomware detection recovery, right? So you can always recover to a good state very, very quickly. And after that, you then start to think about governance, right? What's the right framework, lifecycle, access control, and the retirement of the data. During COVID, when everyone went to hybrid work right away, the first thing come to mind is governance. Who has access to what? And of course, measuring productivity. Like, are these folks siloed when they're at home or when they're very far away from their coworkers? How do you onboard new employees in a remote format? What is the overall sentiment? Are people depressed or are they excited, right? So all those things, we start to see governance and sentiment analysis. We actually, per Microsoft Office tenant, we collect several terabytes of signal data. And that's also unique. Microsoft doesn't publish that to anyone, so you have to actually go collect them. So these are sentiment data, these are usage data, who's talking to whom, so you can actually find cluster of who are the power users, who are the influencers within the organization, because it is a social enterprise of any organization. And so those become very, very important. So governance. And then now with AI, first thing is also now governance. How do we actually govern and access control all my data assets? So when I do deploy AI, it doesn't start to recommend things, one, I don't have access to, and two, recommend things that's misleading and false.
So that's an example of a pretty large company.
Yes.
So if I look to your 2023 Analyst Day, there's an example of a smaller company,
Yeah.
DLA Piper. It's a law firm. They start out with 100K of ARR,
Yep.
and that kind of tripled, in a couple of years. So is the decision-making process and the pain points kind of similar, even though
It's exactly the same. So we actually have the published case studies on our website. They started with actually governance, who has access to what, and basically the life cycle management of that. When to retire some documents or workspaces. And this actually even go to channels, right? Chat channels. So we actually cover all workloads across Office Cloud, not just emails and files, but also chats and shared areas. They call document libraries and sites. So we started there. And then right after that, we were able to, because it's the same platform, then we upsold the backup, data resiliency. And after that, they actually had to migrate other platforms. So a lot of these companies have M&A, merger acquisitions or divestitures. So there's constant data movement. So migrations actually equates to data movement. Data would never stop moving. So it's not migration. Oftentimes people think is a one-time thing. It's never a one-time thing. So Shell has been a customer for us for 15 years. They never stop moving data, right? That's just the nature of the business. And then after that, they want insight, policy and insights to see who is working well and with others. It's actually very important in AI days because one of the bigger part of AI deployments, adoption, especially Copilot, beyond data and beyond secure, is actually overcome human inertia, right? You can hear people say, oh, I don't know AI, I don't want to learn AI. Of course, Accenture go out there and say, we'll replace you if you refuse to learn AI or if you don't learn AI good enough. I think that's very, very draconian, but that's actually in reality what's happening, right? Companies are looking for, it's not AI who replace people, it's people who know how to use AI replacing people. So they have insights. So that's how that growth. So the trajectory is the same. It's just a smaller company.
Great. So it's very clear that your go-to-market motion has kind of succeeded. You've kind of grown customers at a 21% kind of CAGR from 22 to 24. Do you want to call out any particular kind of geography or basically end market that has basically contributed to that growth? And then maybe a comment going forward.
Yeah, you guys probably heard me saying this. We're a bit unique at our sizing, right? We're not not yet a big company, but at our sizing, we have all the traits of a much larger company. So one, we're very global. So total revenue, we're literally one third of North America, EMEA, Western Europe, Middle East, and then APAC. Now, if you just, because APAC does a lot of services, especially in Singapore, this is where we generate IP. So 10% of revenue is actually out of Singapore, but that's really IP generation. If you take the service out of it, so that's 88% of our revenue, that's fully recurring, all subscription software. That split is effectively 35% Europe, 25% APAC, and then the rest in North America. Now, APAC is growing the fastest. Europe's also growing very well. So APAC is 30+%, and so is EMEA. North America, because we started earlier, we have a bigger base, is slower growing. Thanks to recent, federal government, is a bigger part of our business, is slower growing. But even then, our North America growth is 21% at the latest Q, despite the government shutdown, DOGE, et cetera. So that's very good, right? Global nature. Secondly, is we are selling to large Fortune 50s as well as selling to 5-man and 10-man companies, small SMB business. And SMB for Microsoft is actually 40% of the revenue. The long tail, don't discount the long tail. Long tail is fantastic. The margins on long tail is better.
It's self-serve.
And it's completely self-service, digital marketplace, no human involvement. Think about long tail as equivalent of you going to 7-Eleven, buy a can of Coke versus you going to a wholesaler store, buy a case of Coke. The unit price of that is very different. It's the same dynamic playing in software buying, right? When I negotiate a contract with Nestle of 350,000 seats, because we're a subscription type of, kind of business model, it's a very different kind of negotiation. With SMB, there's zero negotiation. So how we unlock SMB, because SMB, obviously, we are very focused on enterprise. We're very complex and sophisticated for enterprise needs. How do we actually unlock SMB? Is through this intermediary called managed service providers. Because SMBs, they don't have IT. So they outsource IT to these IT shops who are increasingly, these are service shops, who are increasingly converting to a subscription business model as well. They manage your IT infrastructure. It's no different than your air conditioned service people, right? You can never get rid of those people because every 6 months you need your servicing air condition. So that's a subscription business. So it's the same thing. So those folks are becoming our best customers. We have NR north of 140%. And all of a sudden we went from 0 to now just under 20% of our business in the last 3.5 years in SMB. We think that this can become 30 to 40% of our business in the next 3 to 4 years, even as the overall business growing 25% year over year. And that's our public guided numbers. So that's exciting. Able to take enterprise grade solutions selling to enterprise and SMB. And lastly, I'm very excited about, you'll hear more about our AI capabilities. One of the fantastic use of Gen AI is a new UI. Leveraging AI to upsell the power of the platform, because our platform is actually pretty powerful. But unless you're sophisticated like enterprise users or MSPs, sometimes it can get a little clunky, right? So what we're trying to do as fast as we can is effectively make the UI becoming a smart automated AI agent that will recommend things to you. It's like, hey, Merrill, you have actually risk exposure here. You have cost overrun here. Would you like me to help handle that for you? Completely 100% customizable. So AI improvements to your UI experience allow you to have infinitely customizable experience. And that's what we're all very, very excited about.
Great. So it's quite clear, ARR is going to grow. And so let's get to the guidance that you provided earlier this year. So $1 billion in ARR, you exited 2024 at about 327 million in ARR. So you project to grow at 25% till 2029. I know there's a lot of drivers, a lot to unpack, but maybe from a high level, the things that AvePoint needs to do to basically drive that growth.
So firstly, for 12 quarters in a row now, we give guidance and we have done that and beat that. We don't guide ARR on a quarterly basis. We guide it on an annualized basis. I think some of the criticism this time was, oh, you guys did really well on the revenue and op margins, fantastic, but your ARR guidance, you didn't raise it. So we have always been since the beginning of the year saying, hey, in the public sector space, especially U.S. federal government, there's chaos and volatility, Doge, Liberation Day, and shutdown, et cetera. Of course, nobody forecasts all these things, but we knew it's going to be chaotic. So we were always constructive in the way we guide on the overall business performance. So we say the revenue will continue to do well. That's why we did the beat and raise. On ARR side, because ARR is a forward-looking number. So for those of you that are new to this space, revenue obviously is recognizing revenue. When you subscription is easy, right? As you every month, just no different than your Netflix subscription. You recognize that. Services recognized based on milestones, work being done. ARR is more forward-looking. So the contract, let's say your monthly contract value, we're now in November, right? By end of November is what, and you times 12. That's the forward-looking number. So that's why it's much more susceptible to the timing of a deal, right? If the deal came in end of the quarter versus the first day of the new quarter, your ARR would be different. So that's really what's happening, right? Because the shutdown actually effectively shut down everything. So yes, we still, despite everything happening, as I mentioned, our growth is still 21% in North America. Our public sector growth is still, we have still growth, unlike other companies. There are companies that just throw in the towel, right? They just give up. So that's where we give prudent guidance, because we also don't know. Of course, now the shutdown's over. Nobody knew when the shutdown's going to be done. So that's why we didn't raise the ARR guidance.
Great. If I look at how you've lifted kind of like your longer term kind of numbers, one of the big changes was on gross profit margin. The first couple of quarters, you've been quite stable at 75% or so. But in 2029, you expect that to be 80%. Maybe just to level set and tell us how you get there.
Yeah, it's actually pretty simple. It's really just the math of reducing the total percentage of services, because services is a lower margin, far lower margin than software. Software margin subscription. We also have economy scale with cloud consumption. The software margin is low to mid 80s. The service margin is in the teens. Everyone who does services understand that. Because our service mix, when we went public, it was 20% revenue. Now it's 13%. And we want to get down to 10%. Just do the math, you will get the margin, the gross blended rate to go up from mid to high 70s and ultimately to 80. But we will always have services. So I chuckle a bit when everyone asks me about forward deploy engineers. That's a new buzzword for Palantir. But in the tech business, you always do services. They're just your deployed consultants, especially for your biggest customer, right? The most complex environments. Why? One, firstly, you want to make sure that they're leveraging the maximum capability of your platform to do what they need to do. Happy customers, right? Happy revenue. Two, you have engineers on the ground to see what's happening, to forecast and to collect new requirements, to expand and new offering, new capabilities, new products. That's the only way to see where the puck is going. The disruption is so fast right now. I would say in the next 3 to 5 years, a lot of software company today will not be around. To be around and continue to thrive, you have to stay very close to your customer. That's why now everybody's talking about forward deploy engineers, right? It's not a new thing. It's just that it just highlight how important on-site engineer, a senior consultant is, because you need to innovate with your customers. You cannot innovate in an ivory tower. So that's why we will always have services. And this is also why Singapore is very unique to us. 90% of our revenue out of Singapore is services, and it's working with some of the most demanding government agencies and customers here, and we generate IP from here, and then we sell it globally. So this is one of the places where we follow where the puck is going and forecast.
And then if we quickly move on to operating margins, I'm quite cognizant of the time. So
sorry for my long answers.
No, we could go on for a long time. But so I guess on the operating margin side, you exited last year at 14%, and this year you're on track to deliver 19%, and then
we did 22% the latest quarter.
But then this for the full year. And then if we kind of look forward to 29, that's like 27.5%. So you talked about the forward deploy engineers, that falls under S&M. You want to just briefly talk about some of the thresholds around the margin leverage?
Yeah. that's actually another unique aspect about this business, right? Usually sub 1 billion revenue SaaS companies are not this profitable. So we have exercised really good discipline to make sure that our sales and marketing efficiency have significant improvement. And we really credit much of that to our channel investment. So our sales and marketing costs as percent of revenue when we went public in 2021 was 44%. Now it's 30%. And that was our long-term goal. So clearly we can do a little better. Actually, so 30% is about the benchmark where Salesforce operates at. But if you actually look at Microsoft, they're at 14 or 15%. It's an incredibly efficient company when it comes to sales efficiency. So there's opportunity to do that. But there's been question for us is, well, you have such a huge TAM. We talk about we have an $80 billion TAM in front of us. Can you grow faster? You're growing, you're exercising discipline, you're growing profitably, you're growing well, double-digit growth, double-digit profitability. Our free cash flow margin is like 26%, right? So maybe less profitable and grow faster. So that's something we're actively looking at. It doesn't turn on a dime, right? These are the big decisions. But increasingly, what you're referring to is, yes, we are investing to grow for 27 and beyond. 26 kind of already in the books due to the nature and predictability of the business, right? When you have NR of 110%. And highly recurring nature of the business going from 88% to 90%. A lot of that predictability, it's already baked into the business. So that's really good, right? That's the beauty of a SaaS subscription business. So right now it's really about, do we really go as quick as we can to our long-term guidance of profit profile, or do we actually have opportunity to speed up growth?
Yeah, I could go on for a very long time. I apologize. I think we'll just stop it there. I think I had just one last question around the addressable market, but I'm sure some of the Q&A might touch upon some of that. So next we'll leave to Millicent to basically run through some of the Q&A questions that we've received, and she'll help to read those out to TJ.
Thank you, TJ and Merrill, for the insightful conversation. We actually do have a lot of questions. So I want to thank the audience actually for putting up their questions and upvoting other questions. So very exciting. We have quite a number of topics to go through in our remaining, 10, 15 minutes. So let's get right into it. Since you talked about TAM, there was a question about industry potential. We talked a lot about industry potential, but perhaps you could give us things like key milestones. You talked about moving into the SaaS and PaaS, which we didn't quite elaborate much on. I think there was a question on that. I'm just combining questions. And then does it entail moving out of the Microsoft environment as well? So maybe some thoughts around that.
Yeah, that's a great question. So today, predominantly our revenue opportunity focused around the collaboration space, which is Office Cloud, and then increasingly with Google Workspace. But the even much bigger TAM is actually the compute side. So IaaS. So we talk about infrastructure service called IaaS and PaaS, Platform as a Service. So what's happening is everyone's moving their entire compute environment into cloud. So AWS or Azure or GCP. So think of them as virtual machines, think of them as applications, think of them as massively highly scalable databases that's running in those infrastructure environments. We are now very aggressively expanding into that space because we have already a enterprise-grade global SaaS infrastructure that's very highly rated from a security perspective, all the regulations, government data centers, et cetera. So it's actually fairly straightforward for us to then say, hey, we don't only cover the workloads in collaboration space, we now also cover the workloads in these infrastructure space. So there's data, there's applications, there's workflows, really no different than the Power Platform, the apps, the workflows we already cover in the collaboration space. So that's a super exciting space for us. And you will hear more in the coming weeks, the things that we're doing in going after that space. So in terms of multi-cloud, the reality is most enterprise customers today are multi-cloud, just from a perspective of business resiliency. So take any company, right? You're probably using Microsoft Office for your Word, your Excel, your Word, and your email. But most likely your infrastructure is on AWS. Most likely your CRM, your sales infrastructure is on something else, whether it's Salesforce or HubSpot. Even ServiceNow has a $6 billion CRM business now. So just in a very simple example like that, you can see that multi-cloud is the reality. And for us to expand our footprint, even just within existing customers, 25,000 of them, we need to do multi-cloud. So that's why we are very, very also focused on the multi-cloud expansion of our capabilities. So recently, we even announced at our earnings of new sources we're adding to our backup capabilities. So we back up about almost 700 petabyte of data on a daily basis. So we also know what the customers are using, whether it's Okta or Confluence, Monday.com. We see that, and because we back up intra IDs. So then we say, okay, these are low-hanging workloads that we can extend to include. So we become more and more strategic to our customers.
Thanks, TJ. That's a good segue, I guess, into the next group of questions, which is really around competition, especially, I guess, when you go multi-cloud and so on. Who are you coming up against? What's your advantage? What's the barriers? And also there was a question on Purview as well. We saw good adoption of Purview recently. How does that affect you? Is competitor, or does it actually lead to better growth for yourself?
Yeah, firstly, we don't compete against Microsoft. We compete within this multi-trillion-dollar ecosystem of these hyperscalers, right? So the competition has always been there. As tech, we always say in software, a year is eternity, even more so today. So that hasn't changed. So what works in our favor is that we do have a platform play. We have been in this space in terms of enterprise-grade capabilities. And also, one of the underappreciated aspect is the sophistication around security and cloud ops and cloud security. Why we are actually winning a lot, even in here in the local space in Singapore, in ASEAN, is there are very, very few players here that have the experience and track record that we have over, collectively now almost 15 years of defending and securing our customers' data in cloud. Because every day, just like Microsoft, we're being attacked. Every single day. So that capability is built over time. And that's not something any startup can just do. So the platform play, the maturity and sophistication around cloud ops, cloud security, and of course, the continued execution and agility of the business. So another aspect of our business that's unique is that for most American software companies, their development population is a quarter of their employee size, and it's at least a quarter, if not a third, of their cost. For us, it's half of our employee size. It's 11% of our cost. So that's thanks to amazing, high-quality dev centers that we have built out over the years, most notably now in Vietnam, which we just received ODC certification from GovTech. We're one of only like 3 or 4 firms in the country that has overseas developed center security clearance so that we can work on government projects in Vietnam. So that's that capability we have. And we have so that's obviously everyone's accelerated by AI. That's just table stakes. But because we have such a massive dev capacity and we can pivot and move much, much faster. So we are a tech company. My co-founder, Kai, always say we suck at sales and marketing, we're good at tech. Finally, since we've gone public, we're decent. After all the earning calls, we're decent at sales and marketing execution. But one thing I'm supremely confident on is AvePoint's ability to execute on tech and continue to pivot and stay agile and follow the market and stay ahead of the curve. So that's how we stay ahead of the competition, by doing the platform play, by staying ahead of the curve on tech, and by staying close to our customers.
Thanks, TJ. Thanks for highlighting the dev capability at a reasonable cost, I guess. Yeah, so we can maybe try this a little bit more controversial question that's come out. A lot of votes for this. It's been noted that your share price has actually fallen recently, especially after the listing in Singapore. So what is the market misunderstanding about your company?
That's a great question. It's not controversial at all. I was actually discussing this with Mara yesterday. If you look at the list of all our peer in terms of public listed company that we always get compared to, over the last few months, there's definitely in the market a multiple compression. The current market is not fundamental driven, it's more sentiment driven. So one day you have OpenAI came out with ChatGPT 5 and Sam Altman say all software become fast fashion and everybody goes down, right? And then weeks later, people realize, oh, you know, that's overhyped, and then things get back up. And you will see this ongoing, especially the case this year. It's been a very volatile year for pre-mid-cap companies. So this is why, from our perspective, is we always knew this. You know, in the U.S. market, there's also a small cap company tech discount. There's a phenomenon called that. So it just means that if you're not big enough, nobody take, you know, you're just going to suffer a lot more from these volatility and swings in sentiments. So this is why we're working very hard to achieve escape velocity. The escape velocity is that $1 billion ARR, right? We give the guidance to 2029. When we give a guidance, we need to hit it, right? If not, do it better earlier. We achieve GAAP profitability earlier. We achieved Rule of 40 earlier than we stated. And we have done this mostly through organic. So now we have a very strong balance sheet of $470 million. We're cash generating. We can do bigger ticket size inorganic expansion as well, in addition to organic fast growth. So we have a lot of vectors of growth at our disposal to consistently and focus on profitable growth, because we still think that the overall macro is soft. You know, people talk about the entire US economy is one giant bet on AI. It's not wrong. So there could be slowdown in the economy. So we're very, very focused on staying close to our customers, having resilient, profitable growth is the way to go. Even this morning, I read about now Meta, Oracle, OpenAI getting to all these funky financing deals to build data centers. And the interest rate they're talking about is very, very high, right? Like 10%, you know, that's getting to private credit. That's becoming dangerous and becoming hairy. So yes, we understand the volatility, and we're kind of, you know, we're the small guy, right? We're the underdog. We're used to getting beat on. You know, when we came out as a SPAC, we did it because at that time it's very volatile. We did it because it makes sense. Within a short period of time, we have certainty of capital, certainty of valuation. But then we get bucketed with all other bad actor SPACs. So we went through this, you know, valley of despair, and then we had two good years of you know, recognition on the market. And this year is especially volatile for all software companies. We're not alone in this. But having said that, we are very, very focused on execution. We're very, very focused on achieving that escape velocity to get heft and get size. I mean, this year, right, our guidance is well over 400+ million in recurring. Next year, given our 25% guidance, it will be well over 500. So once you get to $500 million, 600, 700, 800 billion, then people start to say, oh, this is actually, you know, a different type of company, truly, that they can continue to do this at a larger size. So that's what we're very, very focused on. Not today's stock price, but the ongoing trajectory of the business. I mean, this is a founder-led business, founder-run business. So it's very different than a CFO running a business, for example.
And then maybe just to remind us here, you have an outstanding share buyback of about...
Yes, we have a $150 million buyback program. We still have 128 million. So because of the SGX event, most of the folks didn't know that there was a non-fungibility period. We couldn't do the buyback during that time. So we just resume. We can only resume this week after the earnings. So of course we have the buyback program. Yeah.
Got it.
Thank you. I think that was meant to be my last question on buybacks. That's great. I think we're run out of time. There are many questions here. What we may do is look through them and try and come back with a follow-up note on the remaining questions. But thank you, everyone, for being here and for participating and for all your questions. Let's give them a round of applause.
Thank you very much.
Thank you.